Let's start off with growth. Growth has been quite strong for you. In fact, we've seen a bit of a bounce back with regard to growth. How is it sustaining? Plus, on top of it, when I'm looking at your order pipeline as well, it's at the healthiest point ever. Talk to us about how traction is building up and whether DET is seeing enough traction, and give us a flavor of all that's playing out.
Sure. Good morning, and thank you for having me.
Good morning.
Yes, last couple of quarters has been back to growth for us, and that is something we are working hard to ensure that it continues and it sustains. In terms of what you mentioned in terms of order pipeline, absolutely. What I called out in the investor call yesterday is our large deals pipeline, and that's one of the key levers that we have been working on in terms of the transformation story here at Cyient, is at its highest ever in Cyient's history. And that is something we'll continue to build on. Obviously, we have to bring these deals in, then only it is material to the growth. Right now, what you see, including what you will see in Q4, is built around ensuring better execution, more focused execution, and making sure we are spending time on the right things with the portfolio that we have currently. As we build out our portfolio further, that obviously creates a better scenario for midterm and long-term growth.
Okay, Mr. Banerjee, hi, morning. I want to talk about your EBIT margin. That's seen a sequential uptick. Talk to us about if you're seeing the headwinds for the business behind now, and if this EBIT margin strengthening is going to continue going ahead as well for the next, let's say, 4 to 6 quarters.
Good morning. Yes, on EBIT, as you mentioned, we have had a 25 BPS increase in terms of quarter-over-quarter performance, and that's the third consecutive quarter of EBIT growth. We continue to work towards making sure that we achieve the midterm target we have set for ourselves, which is in Q4 of FY27, we want to be at 15% EBIT. What we have been working on is a combination of significant investments that is needed for the future, as well as restructuring that we have done of areas that are not pertinent to the future. And that has played out in Q2 and Q3, especially the restructuring cost. Most of the investment that we had to do is already in the baseline. There will still be some more as we go along, for sure. But as you see our Q4 numbers come out, you will see that work that we have done in terms of taking cost out, starting to show in our margins, our EBIT margins as we go forward. So we continue to work towards that midterm plan that we have set for ourselves.
Okay. How much of that is likely to play out? If growth has come back for you, I'm trying to understand how quickly can EBIT get a lift?
So as I mentioned, we are working towards 15% by Q4 FY27. So from 12.4, we are working towards 15% by Q4 FY27. The growth will not be linear every quarter. Some quarters will see accelerated growth. Some quarters will see muted growth. And that has some of it has to do with seasonalities in our businesses, where, for example, the European holidays in Q2 of next year will definitely mute EBIT growth. But we are working towards that midterm plan, as I said, making sure that we do not lose sight of our midterm goals.
Okay, Mr. Banerjee, talk to us about your semiconductor business. The order intake, yes, has seen a spike on a year-on-year basis, but the business continues to be loss-making. What's the outlook on that front?
Sure. On semiconductor, firstly, we have to see that business differently. It's a product business. It is not a services business. And that is why we carved it out as a separate business, as a separate entity from Cyient DET, as a 100% subsidiary today, and maybe we'll do something more strategic in the future. So like in any other product business, you have to first invest before you start seeing the profitability show up. And that's the phase we are in. We have given a goal for ourselves, which is by in FY27, sometime in FY27, we'll make sure that we are EBIT neutral. And that's what we are working towards. We have made all of the investments upfront, and that will definitely, as the revenue continues to grow, we'll make sure that the EBIT comes back to neutral, and that's our goal. Obviously, as you are also aware, we have done this acquisition of Kinetic, as and when it closes, which will be mostly in April. That will also be a boost to our EBIT overall.
Okay. Mr. Banerjee, also talk to us about the integration of AI. How are you working on that front? We understand that you've had new management change when it comes to the AI architect front as well. Talk to us about how you are looking at using AI to further the company's growth.
Sure. I mean, AI is something that plays out in almost everything we do. And obviously, it has different levels of adoption. Uh, the more complex the work is, the less the adoption at this point in time is. And we have articulated our point of view in November of last year that, and we stood away from the chorus that was going on in the marketplace about AI first. It is good to see that some of our peers have also followed after we called out that AI first is not the way to go. We have talked about our point of view as embracing intelligence, which is domain capability and expertise led adoption of AI. So we have always believed that it is domain plus AI which makes a difference. It has also been called out in a recent report by Anthropic just this month, where it actually cites that you typically, for higher order capabilities and higher order engineering work, which is what we do, a minimum of 15 years of
Right.
domain expertise is necessary for AI to produce meaningful outcome.
Right.
And that's what our business is built on. It is built on domain, the human expertise, and AI acting as an amplifier.
Right. Okay. Mr. Banerjee, due to paucity of time, we'll have to let you go. But so good to be interacting with you. Thank you so much for joining.
Thank you.
Okay, viewers.